Hello and welcome to Crypto World Insights. I'm your host, Boni, and we've got a packed show for you today. We're diving deep into the past 5 days of crypto madness. And let me tell you, it's been a roller coaster. We've seen Bitcoin playing chicken with the infamous September curse, Ethereum throwing some serious shade at Bitcoin's trading volume, and the SEC finally giving us a glimpse of what a regulated crypto future might look like. So, grab your coffee, settle in, and let's unpack what's been moving the markets. All right, let's kick things off with the big one. Bitcoin. The talk of the town has been the Red September narrative. For those of you who are new to the space, September has historically been a bit of a downer for Bitcoin. But for the third year in a row, it looks like Bitcoin is trying to prove history wrong. We saw a little wobble when the price dipped below $110,000, but it bounced back pretty quickly. Right now, we're hovering around the $112,000 mark. Some analysts are still cautious, warning of a potential dip to $93,000, but the general feeling is that we're in for a strong fourth quarter. So, are we out of the woods yet? The jury's still out, but it's looking promising. Now, let's talk about Ethereum. ETH has been the talk of the town this week, and for a very good reason. For the first time since 2017, Ethereum's monthly trading volume has actually surpassed Bitcoin's. We're talking a whopping $480 billion. That's a huge deal, and it really speaks to the growing strength of the Ethereum ecosystem, especially with the DeFi sector now holding over $92 billion in total value locked. It's not all sunshine and rainbows, though. We've seen some outflows from Ethereum ETFs, while Bitcoin ETFs are still seeing money pour in. This could just be some short-term profit-taking, but it's definitely something to keep an eye on. But here's the kicker. Corporate treasuries are gobbling up Ethereum like there's no tomorrow, to the tune of $1.2 billion a week. That's a massive vote of confidence from the big players. Now, for the news that really shook the market this week, the SEC, under its new chairman, Paul Atkins, has finally given us a roadmap for crypto regulation. The new Spring 2025 agenda is all about creating a clear framework for crypto assets, which is something the industry has been begging for years. We're talking clear rules for issuing, holding, and trading crypto. They're even looking at ways to make it easier for crypto companies to raise money and for investors to get involved. And get this, they're considering allowing crypto to be traded on national securities exchanges. This is a game changer, folks. It's the kind of news that could open the floodgates for institutional money to pour into the space. This is a huge step in the right direction, and it's a major reason why the market is feeling so optimistic right now. Of course, we can't talk about crypto without talking about social media. The September curse has been trending all week, with everyone from seasoned analysts to your cousin who just bought his first Bitcoin weighing in. One name that's been on everyone's lips is Timothy Peterson, a network economist who's predicting a dip in the middle of the month. He's got the data to back it up, so he's definitely one to watch. And of course, we've got the usual suspects. Michael Saylor, who's still bullish on Bitcoin, and Vitalik Buterin, who's keeping us updated on all things Ethereum. It's a noisy world out there, but if you know who to listen to, you can get some really valuable insights. So, what does all this mean for your trading strategy over the next 5 days? Well, our technical analysis is showing a period of consolidation for both Bitcoin and Ethereum. For Bitcoin, we're looking at a range between $108,971 and $115,712. For Ethereum, we're looking at a range between $4,243 and $4,596. We're not expecting any massive price swings in the immediate short term, but there are a few key triggers to watch out for. Keep an eye on any announcements from the Federal Reserve, the daily Bitcoin ETF flow data, and any new regulatory news from the SEC. These are the things that could really move the market. So, how should you play it? Well, if you're a long-term investor, dollar cost averaging is always a good strategy. If you're a more active trader, you might want to wait for a clear breakout above resistance or below support. And for all you swing traders out there, you can look to buy in oversold conditions and sell in overbought conditions. But as always, make sure you're managing your risk. Set your stop losses, take your profits, and don't get too greedy. So there you have it, a jam-packed week in the world of crypto. We've got a resilient Bitcoin, a surging Ethereum, and a regulatory landscape that's finally starting to take shape. The next few days are likely to be a period of consolidation, but there are plenty of catalysts on the horizon that could shake things up. As always, do your own research, make your own decisions, and never invest more than you're willing to lose. Thanks for tuning in to Crypto World Insights. I'm Boni, and I'll see you next time.